Welcome back to Stocklabs for another market recap. We just finished the last full trading week of August on the 26th, and it was shaping up to be a pretty normal week. We started sort of down Monday, Tuesday, and then we're putting in a bit of a rally Wednesday, Thursday, but obviously everything with Jackson Hole, once Powell started talking on Friday and sort of gave like his estimation of where everything stands, it kind of just became a deathly day, which kind of just wiped out all prospects of it being a good week. Closed, down on the lows, made the weekly performance look terrible, and yeah, kind of left everyone with a little bit of a sour taste in their mouth. We were kind of expecting the start of the week to be soft, but then actually I had gotten mixed up with the schedule for Jackson Hole. I thought Powell was leading off, so I thought that Wednesday was going to be the big down day, and then maybe we'd start retracing. But Powell went last, so everything kind of waited around for that, and then all dumped out on Friday. So as far as the performances for the indices themselves, I think this is the second straight week where everything was basically down. Qs were leading on the downside, down 4.7%. I mean, they were down 4% on Friday. So basically, the entire week's performance was kind of summed up. We were unchanged on the week most places by Thursday, and then Friday kind of destroyed everything. So Dow was also down 4%, S&P down 4%, and IWM, I guess you could say, had some relative strength, down 3%, but really nothing pretty was going on here. Gold more or less flat, bonds flat, and the crude trade is still sort of marching higher. From a few weeks back when we said it was kind of like a line in the sand for the energy trade, it has basically come back. It's back into getting back into fashion, you could say. As far as our let's go to the leadership stocks. And as you can imagine, they did not really fare that well. So the leader, quote unquote, was Tesla, down 3%, underperformer, Nvidia down 8.5%, 9%, Netflix down 7%, Microsoft 6%. Google, this is like this is even underperformance versus the Qs. So you really don't want these leadership stocks, leading to the downside. That sort of tells you that there's there's like purposeful selling going on in the market, which appears to be happening again after, a decent amount of time off from that, the second half of the summer. As far as breadth from the industry, from an industry standpoint, sector standpoint, you can see pretty broad on the downside, with the exception of materials. Again, are now sort of, bucking the trend of the general market and being a little more independent. Consumer down 3%, healthcare down 3%. Everything down 3-4% basically in here. Leadership sectors, ag, nuclear, I saw again was like making a move higher. Not sure what was going on there. And then those are the only two that were up over 5% on a median basis. You have a couple of these oil and gas and commodity type plays kind of lurking in the up 3-4% on a median basis, but nothing too aggressively strong. I mean, these stocks are still going to be kind of sensitive to recession fears as they grow or subside on any weekly basis. So it's not so much of a one-way trade anymore. But for now, the crude trade is firming back up again. and commodity trade in general is firming back up again. On the downside, we have actually not that much, all things considering. I mean, I know everything seemed. I mean, Friday was a really big down day, but the week overall up until then was more or less kind of normal. So, you know, by the end of it, at the close Friday, you probably felt a lot worse about the week than what it really was throughout, as it was happening, just because that one day was such a big down day. But yeah, I mean, you have some random stuff here. This is like economically sensitive stuff, drugs. Um, okay, a lot of stores, retail stuff, consumer related things. But overall, there's only, okay, this is like 22 sectors down 5%. I mean, it's really not that egregious. So if we then check the breadth from a market cap standpoint, 1 to 5 billion down 2%, and mid caps 5 to 10 billion, okay, down 2.2%, not much different. 10 to 50 billion, again down 2%, and 50 to 100 billion down 1.9. So you can see sort of TerraCaps. Okay, TerraCaps down 3%. I mean, these are obviously heavily weighted with the Nasdaq stocks, but more or less across the board, everything down around 2%, 2 to 3%, which I mean is kind of in line with the with not in line, but it's a little bit better than the indices themselves. So that kind of showed you that the market overall, if you went like looking at every stock, they it was doing okay to for most of the week, and then the big down day on Friday kind of skewed what the index performance ended up being relative to the performances of all the stocks underneath that sort of make up the indices. But yeah, you had these breadth numbers seem decent given the index performance for the week. Now that could just mean that a lot of stuff is still, like there was like the week basis. The selling only stopped because the clock ran out, is like what you would say, and that there's more selling to be done, in the coming week. So that's also a possibility and probably kind of likely, at least at the beginning, especially with month end on. I think month end is on Wednesday, so I would say uh, for this market, you're going to see continuation to start the week to the downside, and then we'll see what happens when September starts. Oh, I almost forgot to check intelligence for the coming week, if I can find it. Yes. Um, okay, so pretty sparse again. We have small cap energy. Okay, fintech. That's kind of weird because fintech has been kind of wild. Okay, natural gas, and crude. Okay, so a lot of stuff centered around commodities. So I'd say like commodities would be the place. Commodities, crude, natural gas. Those are the types of trades that you might have a higher likelihood of seeing success in for the coming week. If I reverse this to check the flip side, downside. Okay, ETFMG. Okay, alternative harvest. This has to be cannabis, and ultra short financials is bearish, which means that financials could hold up this week. Blockchain bearish. Okay, another bearish cannabis. Aerospace and defense bull ETF is bearish. Okay, so bearish like aerospace. Brazil again on here. Not going to look at that. And consumer discretionary bull ETF is bearish. So consumer is bad. Okay, so likely this week will be pretty choppy with a bias to the downside, I would say, based on all this stuff. Um, Especially the given how Friday closed, certainly going to see some. It's certainly not going to be the swing low. I mean, we're kind of coming off a high from a couple of weeks ago, and now you see some really forceful selling. So um, there will be some continuation, at least probably for the first half of the week, and then September. I know Fly's blogged about it a couple times. September can be really nasty at some years. I mean, it's not a given. On average, it's okay, but some really bad Septembers have occurred. More so than other months of uh, of the year. So yeah, I mean the setup is not great, but yeah, you kind of just have to make it through August, reassess the start of September, and just manage it from there. So we're getting kind of close to oversold, but not really. These lines look like they're really close together, but I mean that could be a couple big down days before you actually hit oversold. So we'll see. We'll see how it goes. But yeah, that's how the week looks. I mean the Fed, I didn't think was giving anybody any groundbreaking news. I mean, they kind of been saying the same thing the whole time, but the market kind of positioned itself in a way that they were expecting the Fed to change its mind about something. I don't know how you could be expecting a pivot at 8.5%, 9% inflation, but apparently the market was, so they got caught off guard and had to get whacked after Jackson Hole, and probably going to get whacked again this week, at least for a while. So we'll see. But thanks for tuning in, and yeah, manage your risk out there, and we'll talk to you next week. Bye.